Issues. And central bank independence and the mandates are institutions that are directed at meeting those challenges. So as Beatrice reminded us in this morning, in the 1990s, there was a wave of institutional reforms in high income economies when they adopted inflation targeting and were backed up by more legal legislated independence. So this concerns the Reserve Bank of New Zealand, Bank of Canada, the Riksbank, the Bank of England, plus ECB around the reformed euro.
Looks like he looks like he just woke up also.
Had their roots in the
Good morning, everybody.
Good
morning. Good morning.
High inflation spurred on by large supply shocks and sustained by high inflationary expectations.
By YouTube's own policies, I can look at this as long as I add commentary and critique. It is not copyright. So whoever owns this channel, please understand that.
So, a first question for the panel. Which were the main concerns behind the 1990s wave of central bank reforms in terms of practical policy experience and perhaps also academic thinking? And how much did these concerns reflect specific challenges of the 70s and 80s or more germane issues? Then we saw a downturn of inflation, and to many that looked like a major success, tolerable losses of output and employment. So the main policy challenges in the next few decades were instead to be about financial crises, how to recuperate from the great financial crisis, and how to stave off new ones, not least at the onset of the COVID-19 pandemic. So we got to see new financial regulation, QE, unconventional central bank intervention, and policy rates at record lows for a long time. So a second question for the panel then is, which new concerns were raised by the events and challenges in the 2000s and the 2010s in handling financial crisis and inflation pressures? And in particular,
still sounding rough.
Do these challenges suggest new trade-offs? For example, between monetary and fiscal policy, or between present macroeconomic outcomes and future financial stability. So if we look at today, superficially, the situation looks like a 70s, 80s redux with major should be and central bank mandates. That is, are there good ideas or even concrete
He's supposed to be speaking already.
Reforms of central banking rules. Okay, so finally the plan for the session. So we'll spend the next 20 minutes
I don't imagine
on initial
this is
remarks
going
by
to
each
move the markets
panelist.
that much.
Then we'll have a discussion within the panel around these initial remarks for maybe another 15 minutes. And after that, we'll turn to a round of Q&A involving the audience. So think about questions, and please think about succinct questions rather than statements beforehand, and try to relate them to the three major questions that I outlined. And in the last 5 minutes, panelists will be able to make some final remarks. Okay,
right,
so now let's go to the initial remarks. At most 5 minutes for each of you.
I am critiquing his
I'm sure these remarks will span many aspects of the broad panel theme, but by agreement, each panelist will put more emphasis on one of the three main questions that I outlined. So Ken and Mervyn will touch on
if he would have added a little bit less of a swoop when he brushed this morning, he wouldn't have a massive hole right there.
Please, Ken Rogoff.
There he is. There
Well, first of all, thank you very much to the organizers, to the Riksbank for inviting me
Yeah,
to speak.
get your coffees out.
I think you've heard so many
Cheers.
remarks about Stefan. I can just summarize them by in the central banking community, he is regarded as a guru, that you don't know the answer, some hard question.
Guru.
He's a person you really can go to and get.
Let's see if I can do this some other way.
Answer to, and we'll hear more about that as things go on. I've been asked to talk about some of the early developments, more the question one that we've had here. And I think the academic literature on this started in the 1980s. But of course, really it goes back among practitioners far earlier than that, but I'd say an especially important event was the Fed Treasury Accord in 1951 that set up the Fed to be an independent central bank. Back in the 1980s, that was a rarity still. The Bundesbank had achieved that, but most countries had not. My own contribution was to develop a theoretical model that would try to address how it would work, why it would work, and it was an answer to a very abstract question posed by Kydland and Prescott and Barrow and Gordon about why you might get stuck in high inflation and what you might want to do about it. My paper looked at various ideas, including using an inflation target, appointing people who already had a reputation for having a strong anti-inflation commitment. And needless to say, I was very inspired by the great Paul Volcker, who I was working below, very, very far below. At the time when I was working on that. And there's been just tremendous amount of literature since taking this to many places. I think you're all familiar with Europe, New Zealand, the United Kingdom, but I wanted to just really emphasize an area people don't think about as much, which are emerging markets. And Tobias Adrian really spoke about this, but I still think most people don't quite understand about the efficacy of the concept, about how important it is. European emerging markets, if you looked in 1992, there were 40 countries with inflation over 40%. And that doesn't even capture things because a lot of them had hyperinflations at the time.
Since he's not really talking yet, this is daily res. It's an old daily res price. $17,178. It is simply yesterday's close. Typically, if you're new to the channel, welcome, but typically our resistance and support levels are objective levels of closure. We use bullish closes as resistance. We use bearish closes as support. This is old resistance. If I go back into the intraday, you can see last night during the game of the Georgia Bulldogs absolutely laying the freaking smackdown on TCU. Bitcoin formed a support right there at that price. And that is where you got your bounce from. So if you were looking for long entries on pullbacks into support, this would have been the first area to look for those entries. That is taught on this channel and has been since day one.
And to get out of it, the early solution that was tried in many places for a long time was, well, the dollar's really good, or let's fix our exchange rate against the dollar. And that was very good for those of us that want to study financial crises, but on the whole didn't work so well. There was really this period of transformation where some very bold emerging market central bankers got the idea, it worked in advanced countries, let's do it here. And I think there are many, but I would single out Arminio Fraga in Brazil, Guillermo Ortiz in Mexico, for example. And I would say there are markets, they weren't really doing inflation targeting. They aren't really still doing inflation targeting, but they've used this as a device to establish their independence. Now, just to sort of summarize, I would also say there are so many things I didn't expect, and I just single out one. I'm surprised the extent to which central banks in everywhere almost are regarded as honest brokers. I mean, if you want to know what the data is, you go ask the central bank. And I think that's also part of this coming from independence. I think another thing which people in this room are very familiar with, but I think it's been very important, is the community of central bankers helping to support each other, exchanging ideas. And there's been a huge networking effect in this, in providing ideas and also support. When the whole central banking community stands behind you, a little bit, your government listens. And I think we can point at many examples of that. And then, you know, certainly recently, the central bank independence has been under attack. I certainly don't think it's an idea, you know, which is over at all. I would actually argue that the introduction of central bank independence has been the most significant positive development in macroeconomic policy since the Second World War. Thank you.
Let's go, Powell. Oh, Jesus, it's not him yet.
Well, Torsten, thank you, and good afternoon, everyone. Torsten's given us 5 minutes only, so I shall reserve my stories about Stefan and the resurrection of the British banking system in 2009 to conversation over dinner. I think it is impossible to understand the movement towards central bank independence without seeing it in the context of the great inflation of the 1970s and also the stagflation of the 1980s.
The elites.
The former was the consequence of, I think, in large part an intellectual mistake at the time in thinking that there was a long-run trade-off between inflation and unemployment, so that tolerating a somewhat higher rate of inflation would make it possible to sustain a lower level of unemployment. But following the breakdown of Bretton Woods and the link to gold and 2 large oil price shocks, discretionary monetary policy led to rates of inflation well into double digits, and in some cases, such as the UK, above 20%.
Just looking for levels for potential.
Said, in many emerging markets,
shorts
higher still.
Based on
and the
market fading
stagflation of the
anything
1980s
Powell has to say about inflation.
Of efforts to reduce inflation, which led to recessions, while inflation still remained relatively high. Now, an intellectual revolution in macroeconomics undermined the belief in this long-run trade-off between inflation and employment and helped to restore the case for price stability, which had been made over many decades before.
Fix this
arguably
better
most persuasively by
after the
Maynard
stream
Keynes
today
in his tract of monetary reform. But the attempt to achieve it after the breakdown of Bretton Woods by rigid exchange rate links collapsed in 1992 with the departure from the exchange rate mechanism in Europe of both the UK and Italy, and the end of the fixed exchange rate links in Sweden, where interest rates had been, some of us remember, hard to think of this now, raised to 500%. And the same applied to Finland. Now, politicians drew 2 conclusions from the unhappy experience of the 70s and 80s. First, inflation was unpopular. If exchange rates were to float, therefore, then a domestic framework was needed to ensure price stability. And that framework was the adoption of inflation targets. And second, the measures required to eliminate inflation were also deeply unpopular, with high rates of unemployment for a while. So politicians found that setting interest rates wasn't actually much fun. So why not give that power to an independent central bank with a mandate set by Parliament. And those two conclusions led governments around the world to give greater independence to their central banks. And in most cases, this did go hand in hand with an inflation target. Now, the policy debates at the time in the 1990s are, I think, helpful in understanding the challenges to monetary policy today. But there are three important differences between then and now. First, in the 1990s, the memory of the great inflation of the 1970s was still vivid. Today, there is almost no one below retirement age who remembers the peak inflation of almost 50 years ago. And until recently, low inflation had come to be taken for granted, both by economists who mistakenly assumed that inflation in the medium term was determined by the inflation target, and by the public who had stopped thinking and talking about inflation. So the constituency for low inflation, so widespread in the 1990s, has been somewhat eroded. Secondly, in the 1990s, the popular support for low inflation encouraged politicians to grant
high of
independence
day
to
is
central
HOD
banks
for anybody not
to support them
down with the
when it was
terms of
necessary
trade talk.
to raise interest rates. I think today governments can see only too clearly the challenge of issuing substantial quantities of government debt when interest rates are rising and central banks are no longer buying their debt. So external pressures on central banks are, I think, much greater now than in the simpler days
You
of the
think he already
1990s.
spoke?
And third, when they were introduced, and I think this
Don't
is in
tell
some
me
ways
that,
the most
because I'll
important
shut
point.
this guy up right now. No, he hasn't spoken because this is where it started. That dude with the hair was the first one to speak. Then the bald guy. And this guy with the jokes. Now
Inflation
he hasn't
targets
spoke
were
yet.
not seen as a theory of inflation. But today, in the models currently fashionable in academia and used by central banks,
Still
the
battling a
inflation
cold or
target is the
the
variable
flu or
that
whatever.
closes the model and determines the path of inflation
So excuse
in
me
the
for
medium
the
term.
snifflies and the snooflies.
But the original aim of inflation targets was actually to focus and change the way decisions on monetary policy were made. That is why inflation targets were accompanied by measures to increase the transparency and accountability of decisions and decision makers, respectively. Clear explanations of the reasons for decisions on interest rates were to be set out not as a matter of mystique by central bankers mumbling and saying very little. They were set out clearly in speeches, evidence to parliaments, and reports such as the Bank of England's inflation report. And although these innovations remain, I worry that model builders have tried to use the inflation target as a theory of what drives inflation. Because as a result, any deviation of inflation from target is assumed to be transitory, and policy mistakes followed. So I conclude really that an analysis of why many central banks were granted independence in the 1990s, along with the adoption of inflation targets, is clearly relevant to understanding today's challenges. Thank you.
I guess he'll be the next guy.
He was one of the founding fathers. He was already there, and I actually learned a lot from him in terms of the relevance of financial stability for monetary policy, the importance to need to act when it's needed.
The newest thing from Pizza Hut isn't pizza at all. It's cheesy, so crispy, loaded with
I'd be
is
like,
not to break the rules,
cheese.
because actually rules are important, and
We
that's
like
going to be
that
one of my
cheddar
main
too,
points here.
don't
But
we?
I'm saying
But
this
in the form
because
of
I think this is all
money.
crucially important at the current juncture. As we've just heard, I think in some sense central banks have enjoyed a capital of inattention or rational inattention to risks to price and financial stability. We've lived in a period of very low inflation and moderated risks to financial stability, so the public didn't actually pay much attention to central banks' core mandates. But current macroeconomic developments, not just cyclical but also structural, really challenged price and financial stability. So explaining central bank independence and acting accordingly has become more difficult and also more important. Central bank independence is certainly protected by institutional safeguards. We've just heard that. And that actually includes fiscal and macroprudential policy frameworks. But I think we also need to be very accountable. We need clear communication to sustain public support to independence.
Like cheese.
So let me explain these points quickly. Obviously, as been mentioned, inflation and risks to financial stability have been low, so the public in some sense could safely delegate the task of price and financial stability to technocrats and central banks and pay relatively limited attention to the details. Now this has changed. That's my second point. So,
this is Bitcoin's current daily high right there, 17,302.
Central banks today, and it's one of the main concerns of the general public.
We got the market open in 10 minutes. So Powell's going to be speaking like literally when the market opens. So expect volatility. Make sure your risk is contained.
And actually that ranks
risk
above
containment,
like
that is what we do here.
The international situation.
We are risk mitigators.
And I would argue that actually concern about high levels of prices and perceived inflation
take these entries. We want to make sure we're not going to lose a lot of money.
So that's the first challenge. The second
but with
challenge
leverage,
is that,
we can make a lot of money if we are correct on
vulnerabilities
directional
in the
bias.
Have built up. In Germany, to give an example,
you
we've
did
had
break down on the dollar yesterday. There's your clear breakdown. There is the yearly open. Currently today, you have retested the yearly open, and you have gotten a push lower. It does not mean that you're going to stay under the yearly open. It's just vital that you understand these levels for your trading success in the future. If you are new, welcome to the channel. My name is Heath, and this is the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders.
In corporate insolvencies, very low credit risk, strong support to interest rates,
we do not care about what all these other people are saying.
The necessary monetary adjustment that can lead to the buildup of further vulnerabilities. And I think if we look back to the global financial crisis, we have seen how monetary policy can actually
we know what the central bank is. We know what it does. We just want to hear what Powell has to say.
Provided liquidity to stressed financial institutions
profit target,
and often to institutions with potential solvency problems. Capital buffers in the financial sector were insufficient, and fiscal funds were ultimately needed to cover losses.
I don't know that you'll get a push all the way down to 17,178 because you have a new intraday support right here
gaps in the institutional
at
framework
17 to 21 on the 5 minute. It looks like that.
And independence and credibility of central bank also
short entries would look for entries about 17 to 84 with a stop at 17,305. Take profit 17 to 21.
Financial or fiscal or financial dominance.
The first time I said that, the mic was muted. I apologize.
To the frameworks for central bank independence that we've just heard about. Obviously, there's a lot of institutional safeguards to central bank independence, In Europe, primary law assigns a strong role to central bank independence, and the legal basis in the
Long
war system is even
entries,
stronger
same
than in
thing.
Germany. So
Long
changing the
entries.
treaty
If
would
you want to
require
be
unanimity
long, you are
versus simple
looking for
majority when it
entries
comes
as
to,
close to
changing the Bundesbank
17178
law in
or
Germany. Maybe just as an
17221
interesting
as possible.
side remark,
Profit
there's interesting
target
historical research showing how
17284.
independence was made into the legislation in Germany, and when independence was discussed in the 40s and 50s, there was actually stronger support for independence by the U.S. authorities than by the German authorities.
Something like that.
Obviously, it's different when it comes to financial stability.
Something like
the
that.
frameworks, the macroprudential frameworks that we have to consider that the time horizon for financial stability risks is
DXY
different
weakness,
than for monetary
I would
policy.
be more
Financial cycles
prone
last longer
to
than business
wait
cycles.
for the long.
The policy objectives are different. It's more difficult even to quantify
On the S&P
financial
500, you
stability
did
than this is the
indeed
case for price
yesterday get back
stability.
above
And we
your
have different
yearly opening
types of
range.
instruments.
Today
But still, we
is
need
a
also
very
independence for financial
small
stability
range day.
policies,
This
as
is
we've also heard from,
consistent with
Tobias,
bullish
to avoid an action
continuation.
bias and to avoid that
Currently,
authorities come
now
under,
if you get a
under
nasty
fiscal
push
pressure.
lower and take
The
out
last point I would
yesterday's
like to make
low
is also something
or the
that,
day before yesterday's
colleagues have
low,
mentioned.
this green
Legal
candle,
frameworks are not
that would be
sufficient.
more
We have to
consistent
communicate
with
and to explain
bearish
independence.
continuation.
And this can actually be quite a balancing act. So we have on the one hand the technical experts to which we have to explain our policy cycle, where we evaluate our policies, the intended and unintended consequence of policy choices. But these
Okay,
policy
so hang on a
evaluations are about
second. I'm being told by multiple people that he has already
technical and
spoke.
tuned to an
All right. You see right here, it says live starting soon. Then you get this guy, right? According to this channel and what this channel is produced, he has not spoken. So if Powell spoke, he spoke before this thing even came on. If that is the case, then, I mean, if you can prove it, we'll shut these people up because they're not saying anything that is relevant to what we're looking to do here. He did not speak on the feed, but CNBC is reporting on it. All right, then.
dialogue with the public in particular, because
Well,
we
let's
live
just do something. No, there he is right there. CNBC is wrong. CNBC should be strung up.
I'm going to use my comments focusing on the U.S. context, and I'll address three main points. First, the Federal Reserve's monetary policy independence is an important and broadly supported institution.
I know what I be doing over here. Come on now. Give me some credit. I was born at night, but not last night.
Serve the American public well. Second, the Fed must continuously earn that independence by using our tools to achieve our assigned goals of maximum employment and price stability. And
maybe
by providing
CNBC
transparency
is
to
just
facilitate
dumb.
understanding and effective oversight by the public and their elected representatives.
That's why I choose to watch Bloomberg.
Third, we should stick to our knitting and not wander off to pursue perceived social benefits that are not tightly linked to our statutory goals and authorities. So starting with the first point, as Ken and others have pointed out, on the first point, the case for monetary policy independence lies in the benefits of insulating monetary policy decisions from short-term political considerations. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. But restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy.
Right, we know that.
The absence of direct political control over our decisions allows us to take these necessary measures without
with those consumer reports you got the other day, you're going to start slowing that rate down
policy in the United
baby,
States
soon.
and more broadly around the world are well understood and broadly accepted.
If I can get a pullback down to
However,
that
in a
hourly
well-functioning
support, I
democracy,
might take
important
a
public
long. I am
policy
already
decisions should
long
be made
currently.
in almost all cases by the
2
elected
accounts,
branches of
and
government.
I am currently short the
Grants of
dollar
independence
at
to
the top
agencies
of the
like
dollar.
ours should be exceedingly rare, explicit, tightly circumscribed, and limited to those issues that clearly warrant protection from short-term political considerations.
Well, that's possible that they submitted the speech. The speech is obviously written down, and CNBC is just trying to be first on the story. Or maybe this is pre-recorded. It is live U.S. Fed chair.
With independence comes the responsibility to provide the transparency that enables effective oversight.
This
in our
is
case,
where
by
I would like
Congress,
to maybe
which
get
in turn
into an
supports
entry
the
here.
Fed's democratic legitimacy.
Even as
At
low
the
as
Fed, we treat this as an
17,200.
active, not a passive responsibility. Over the past several decades, we've steadily broadened our efforts to provide meaningful transparency about the basis for and the consequences of the decisions that we make in service to the American people. We are tightly focused on achieving our statutory mandate and on providing useful and appropriate transparency. On the third point, it is essential that we stick to our statutory goals and authorities and that we resist the temptation to broaden our scope to address other
He is
important
speaking
social issues of the day.
right now.
Taking on new goals, however worthy, without a clear
That's him.
statutory
That's
mandate
Fed Chair
would undermine
Powell,
the case
right
for our
there.
independence. In the area of bank regulation, as Tobias mentioned,
The speech was probably sent out to all the news networks so that way they could give their opinions on it before he actually spoke. Or maybe this is late. Maybe this isn't live. I don't know.
the Fed has a
All
degree
right, let's do this, chat. Let's take a vote in the poll. Press F if you want this live stream to die and you just want to hear my commentary. Press K. No K. Push C if you want to continue to listen to what Fed Chair has to say. I see one vote. Keep them coming. F to kill the feed. C to keep the feed. It looks a little bit mixed, so we'll keep listening.
of independence, as do the other federal
I'll count
bank
'em.
regulators. Independence in this area helps ensure that the public can be confident that our supervisory decisions are not influenced by political considerations. And today, some analysts ask whether incorporating into bank supervision the perceived risks associated with climate change is appropriate, wise, and consistent with our existing mandates. Addressing climate
Pepe
change
has spoken.
seems likely to require policies that would have significant distributional and other effects on companies, on industries, on regions, and on nations. Decisions about policies to directly
guys are
address
funny.
climate change should be made by the elected branches of government.
We'll
and
keep
thus
listening
reflect
to
the
him.
public's will as expressed through elections. At the same time, in my view,
I mean,
the Fed
we're
does
late
have
on
narrow
what he's
but
saying
important
anyways.
responsibilities regarding
But
climate-related financial risks.
We know what we're looking
These
for.
responsibilities are
We got a
tightly
fresh
linked
daily
to our
high, so
responsibilities for bank supervision.
trade's probably not a
The
short.
public reasonably expects supervisors to
But I
require
was
that
wanting
banks
to pull back
understand
down to there.
and can
We didn't
appropriately
get it
manage
all the
the
way.
material risks, including the financial risks of climate change.
Here it is.
But without explicit congressional legislation,
See,
it would be
this is where we
inappropriate
were
for us to
looking for
use
long
our monetary
entries.
policy or supervisory tools,
The market
for example,
is
to
open.
promote a greener economy or to achieve
So if you
other
want to take a
climate-based
short,
goals. We are not, and we will not be, a climate policy maker. Thank you.
well, there you go. He was only speaking on climate change and how the Fed is not doing policy around climate change. No shit. I think we kind of knew that already. I mean, printing money does do some damage to the climate, though. the financial climate. Nah, we know that they're going to continue on their rate hikes, guys. That's all we're going to listen to. I don't care about the rest of those yahoos. I mean, they represent different parts of the world, the central banks over there. So he's pretty much done. Didn't say a lot about inflation. Maybe he speaks again later. Who knows? But I was assuming that was going to be like a normal press conference and we were going to get questions and all that.
Excellent. Thank you.
An IS and LLM curve, and he says, well, you could
They
shift
probably
the IS
are
curve, that's
getting
fiscal policy.
questions
Or you
now,
could
but yeah, we'll kill it. We don't need it. We don't need it any longer. We know what we're looking for. This thing not push up to make a fresh daily high. It did look like it here, but inside of this hourly candle, because that's 905. So just let's continue to watch that, because we've seen in the past, like on FOMC day, I usually do those live FOMC non-farm payrolls, all the major news events. We do them live, but I was having issues that day with the internet. I could not go live. We ended up doing a live stream inside of the Discord, because Discord it's different in the way that live streams are approached. They have different software. You need less upload speed required in order to live stream on Discord. So we did it on Discord. Basically, I took a long play right at FOMC on the spike up. I took profits, moved my stop to break even, and then just to prove a point about how, these operating ranges that I be teaching you guys about, you can literally be on the wrong side of the trade and still make money. So I took a short inside of the operating range as well. And as it came back down to test the operating range support, exited the position. So I made money to the upside live in the stream. And then I made money to the downside on the fade. All right. Today's press conference is not a high-risk news event. It was scheduled to be a high-risk news event, but he only spoke about what the Fed is and climate change. It's clear the Democrats are in office. We already knew that. What's up, everybody? How's everybody doing today on this fantastic Tuesday morning? Tuesdays are my favorite because I get to be live in front of you guys, the public, the chat on YouTube. Love hearing your guys' opinions and complaints and everything else. Absolutely fabulous. Thank you so much, first and foremost, for your time. But what we are trying to do here, what we do here, is we look for live trades during the market. We wait for the market to open at 9:30, and then we try to look for trade entries across all asset classes other than futures. We will trade futures such as oil, gold, and silver, but we do that usually with options on the stock market or in the stock market with the TOS platform, which is Thinkorswim. I do not have that platform open currently, but we will discuss any potential trades that I see. Right now, you just made a fresh high of day. So if you believe that Bitcoin is going to go lower, then you would be looking to take a short entry right in and around this area, 17,302. Your stop would be just above the high of day, and on that position, you would be risking merely, anywhere between 2 to 4%. You don't want to risk much more than that. 4% risk on an individual trade is a very big risk. Typically, on FX, I only risk 1% per trade, and then with crypto, it will vary depending on the setup. But it's never over 5%. never over 5%. I am only always trying to make a couple percent so that way I can bounce with my money and run. Because if you can consistently move in and out of the marketplace, you can make a ton of money in your lifetime. We just got a nice push up to that hourly supply zone. That would be a better place to look for short entries, but that also means that you're trading well above the 4-hour supply zone. Right there is your 4-hour supply zone. The top of the red line is, in fact, going to be 4-hour resistance. Same profit target, 17,221. That is where the market reversed. That is the lowest hourly close. So that is going to be support until you close an hourly below it. We were watching yesterday's close for entries last night, but I don't trade the Asian session because I am too afraid that the London session will stop me out because I'm asleep during that time. So when I put risk in the marketplace, I like to be right in front of my monitor. That way I can manage that position. Managing trades is just as important as the risk, in my opinion. And basically we're just kind of sitting here seeing if this is going to end up being a short trade. On the S&P 500, you are green on the day. We walk over here, you can see that on Ethereum, you're up 1.07%. Bitcoin currently up less than 1% at 0.64%. We got the BTC1, the futures, they're up 0.5%, but there is a 15-minute lag on that feed. Euro USD up 0.17%, which is basically unchanged on the day. Pound yen 0.2% to the downside. Pound dollar 0.2% to the downside. The DXY has essentially liquidated the low of day, and you are currently getting a bounce. But I do not think the dollar is a long. The dollar is currently trending lower. There you go. DXY trending lower. You're under the yearly opening range. As long as you are under the yearly opening range, the yearly open is a good spot to look for potential entries. I did post a chart on TradingView. I am the official trade talk on TradingView. So if you want to follow me over there, you can get that chart. Unfortunately, it doesn't have all of the data. So when we click on it and pull it up over here, you can actually mess around with this chart yourself. What just happened? Yeah, you can mess around with the chart yourself. If you look at it on the daily time frame, man, I wish I would have gotten rid of that. If you look at it on the daily time frame, you can see how these yearly opening ranges work. You can see how I was able to basically call the second best short of 2022 on Bitcoin based on the yearly opening range. And there's several times in Bitcoin's history where you have a yearly open, you trade away from it, come back in for a retest. That would have been a phenomenal spot to look for longs. All the way over into here. Got an absolute flawless test of the yearly opening range. We know that right there is where we had that speech between Elon Musk and a couple other people, and then Bitcoin rallied from there. But I would argue and say that the reason Bitcoin rallied from there is because that's where demand typically will show up at the yearly opening range, as long as the current yearly trend has been one direction. Now, in 2020, you had an outlier there, right, where you had the pandemic. But still, once you got back above that, phenomenal place to look long. I just suggest you go over there, take a look at it. It will help you to understand yearly opening ranges. It will help you to understand how these technical levels, these objective price points on the chart, are fantastic areas to look for your entries, the strategy that I have been teaching for a long time. If you check it out and you get any value at all, please go ahead and smash the like button. It's been viewed by 22 people. 2 people have hit the like, so I think that's the like. I'm not very active on this platform because I do most of my stuff on Twitter and YouTube. But, it is what it is. You can like it if you want to. You don't have to. But moving forward, the DXY is currently trending down. We are short on the DXY from this swing high. We can't trade this asset. I can't trade this asset because I do not have a brokerage account that will allow me to trade this asset. But how I did trade the asset is I traded it by shorting USD JPY. We were looking for those short entries there. So on that day when the dollar made its play, I took a short right here and essentially top ticked the USD JPY pair. That is how I am short the dollar right now. I will continue to hold this short position for all of 2023 or until it makes a break to the upside and stops me out. On this channel, in July, when inflation topped out at 7.1, we were looking for the markets to roll over. Not very popular because everybody is bearish. Everybody is super bearish. Everybody thinks that the markets are going to make fresh yearly lows. Well, it would be fresh. It would be not this yearly lows, but last year's lows. And they think that they're going to see an 08 style bear market. And I just posted this yesterday on Twitter. If you want to follow me over there, it is at trade_talk_. Right there. There is a link in the description that will take you there. Be aware of anybody that ain't me. I have only 4,471 followers. So follow this account. I am following 139 people. People who have lost hope. Bitcoin is going to zero. Bear tweets getting more engagement than bullish ones, and the Dow Jones crept up and switched to bullish almost. One last step, get the 100 exponential moving average above the 200. 08 bear market is not coming. There's a pretty good chance you're late, and we were not. So if this ends up playing out, once again, I will have called the exact perfect bottom on the risk markets with the exact perfect top on the dollar, which is why I've been telling people that they should have been looking for long entries on Bitcoin. Now, with that being said, Bitcoin did make a fresh bear market low because of FTX. In fact, if you take FTX and Luna out of the mix, there is a pretty good chance that Bitcoin is trading up around the $25,000 mark. There is a pretty good chance that June would have marked the low. All right. But you did have Luna and you did have the FTX debacles. So Bitcoin is trading where it is trading. And if another exchange, massive exchange, or another massive broker or anything, any fund or any place that has a ton of Bitcoin, if they end up having to liquidate those Bitcoins, then it will obviously cause another move to the downside. But as of right now, I think you guys should be looking to buy supports. You know what I mean? But Obviously, you don't have to take my advice. You can short the snot out of it if you want. There it is. Currently, you are pushing back down after tagging the 1 hour Heath level to perfection. This is your profit taking area, 17 to 21. So if you did indeed short at the Heath level at the 1 hour supply, you want to start taking profits now. Go ahead, take 70% of that position off, move your stop loss to break even. And for us bulls, we will wait to see if this area access support. If it does, we will get long and we will target high of day. Now, I would much rather get long on Bitcoin at a daily level, right? At a daily support. Like down here at 16,938, that's your last bearish closing day. This is the area that I would much rather get long. I do not like getting long an asset after it's already been expanding. I did, however, post before the new year. I posted it on December. Right here. Happy New Year. December 31st. That's the day before the yearly open. I might do something crazy and buy some more Bitcoin on the very first day of the new year. This yellow line right here marks that. Naturally, I bought it at support. This is support. So on this day, I bought Bitcoin. So this is my entry on 2 accounts. I took it on 3 accounts, but I took all of that position off when I wanted to trade NFP Friday. So I still currently am holding 2 accounts long from 16,550 and 16,540, which is the yearly opening range. Now, if Bitcoin comes back down to the yearly opening range, that would be a phenomenal place for you to look for long entries, as long as you're not closing weekly candles under there. So we just lost a ton of people. I'm not sure what's going on, but whatever. We don't care. We keep rolling. We're here for the everyday folks, the ones that come here every day. The ones that like to smash the like buttons and all that, those are the ones that I love to speak to, because those are the true hardcore learners. Excuse me. And unfortunately for the people that leave, those are going to be the people that are actually killing these markets in the next couple years. Because if you backtest anything that I've done and said, and go back and look at all my videos, you're going to find out that I am very consistent in calling massive market tops and massive market bottoms. Give me 1 second, guys. I got to go top off on the coffee. So while I'll do that, I will let our theme song play. This does not mean we are leaving. I am not leaving. I am just getting started. All right, so don't go nowhere. Yeah, hyped. Let's get hype. Let's go, chat. You're gonna find nobody does it like we do it over here. Consistently, baby. Look at that. Boom. Let's see if we can get that profit target back up to the upside. 17,302 would be the bullish profit target. We can get rid of this red 4-hour heat level. Let me kill the music. Or at least turn it way down. Let it finish. Some people like that song. The name of that song is Venomizer by Summit. S-U-M-I-T. 2 words. Summit. Venomizer, if you want to check it out. All right. Let's rock and roll. Okay. So, yeah, that's the bullish entry right there. That's where we said we were looking to get long. We'll see if we are able to make any money on this trade, or will we lose money. As I was up getting coffee, we had a flawless test of that level. So we already discussed what we were looking for. Mr. Powell did not say anything bearish, and the markets have been bullish. So we typically want to trade bullish markets to the upside. Let's pull the Dow Jones up over here. Let's see what the Dow Jones Industrial is doing on the day. Yesterday had a slight pullback day. Let's get all of our moving averages on here so that way we can go over that tweet. And then the 200 simple down there. All right. So while everybody's waiting on the blow off top from the VIX, we've already been long, like long and strong. We've already been short the dollar. We noticed quickly that the market or participants was not hedging their positions with the VIX. They were hedging their positions with the US dollar, right? That's why the dollar was going up so high like a rocket ship, and everything else was just basically not doing anything. All other risk-off assets weren't doing anything either. So since we noticed that, we knew that when we were looking for a top in the dollar, that would probably likely be the bear market lows. And thus far, that has proven to be the case. Now, it is true that nobody can predict the future. But with that being said, man, we do a pretty damn good job of it day in and day out. But you can see here this blue line. Excuse me. This blue line here is your 100 simple moving average. All you need is for that thing to get above the 200. The 200 is this pink line right there, and you will have all of the moving averages structured the right way. This dark, deep red line is the 200 simple. I put that on the chart too because some people don't look at EMAs. They only look at simple moving averages. So just to let you see that, right? You literally just need this blue line to cross that purple line, and all of your moving averages will be structured bullishly. That isn't something that is easy to do, especially in a bear market. These 200s means you need 200 days of price action before this will even populate. You see what I'm saying? So very, very slow moving average. And although we have gotten above the red lines and the purple lines many times in bear markets in the past, you will find very few bear markets where you actually crossed back to all of the moving averages being bullish again. right? That's the difference right there. All of the moving averages got that bullish cross. If we go back to the 2020 pandemic, you're going to see that same kind of familiar thing happen here, where that blue 100 got back above the 200, back above the 200 simple, then the 200 simple and the 200 exponential crossed, and boom, shock, a lock, bull market. So I'm not saying that we're going to see new all-time highs or anything like that. All I am simply saying is that while all of you people, look at this, look at this, look at this, I have my take profit set at 17,302, by the way, 17,302. Make sure you take profit on this move. It wouldn't hurt to go ahead and do that. Current position is up 19%. So by the time it's all said and done, if I can get out here, I'm going to go ahead and set that down to 17,293. If I can get out here, I will be up on the day roughly about 15%, which isn't a bad day considering we've been making money all week. And we just got started on the week. I don't know what price will do though. All right. And I'm not saying that jokingly. I'm being honest with you. I don't know that price will do this. I just know what areas to look. Right. I just know what areas have higher probabilities of working out, of turning around, of being bullish, of being bearish. So had you been here listening to me today, you could have made money on the short trade had you taken the short where I said, and had you taken profits where I said. Now, it's yet to be seen if we're going to make money to the upside yet, because Bitcoin needs to get above 292 in order to take me out of the position. And if that happens, I will take off 70% of the position, move my stop loss to break even. Music too loud, music crazy loud. Sorry about that. Heath, you just take the entry at the bullish hourly support. I thought you said to wait for how the market reacts at that point. Yeah, I do say that. I say that a lot. But this is different. This is the open, right? This is the open. So, you're in the first 30 minutes of the New York Open. Typically, you're going to see stuff like that. Just a bounce, go, bounce, go. But I would much rather you wait for support to build in. If you're trading during a time that is just random, okay? Random. Like last night, I think it was Film Garden was asking me about this entry down here on this hourly. Once this hourly had closed, he asked me if now would be a good time to look for that entry. And basically, I told him support is holding. You know what I'm saying? Like, I don't know. There's nothing else I can tell you other than, yeah. I mean, it's holding. So if it's holding, then yeah, you want to take a swing at it, then go ahead. Wait for another retest of it. You got another retest of it here. Not this white line. This one right there. And you got another retest of it there at 2200 hours. But like I said, during the Asian session, I do not like to take trades during the Asian session, so I didn't trade this. In that scenario, I would much rather you wait for support to build in. Much rather. But when we're scalping the markets at the open, we're just looking to get in and get out real quick. that's when we're going to be just literally taking entries on a touch of the level. And then if price continues to push and push, then you just mark it out of it real quick. Or if your stop doesn't get hit, because you could be on the wrong side. Typically, this is the reaction we want to see at these levels. If we get these reactions, then we kind of know that the market is filling the same levels that we're feeling. And if that's the case, then just jumping in is okay. It's up to you how you how you do these entries, how you do this. I'm just simply teaching you how to identify high probable areas, the areas of which that you want to even be thinking about taking a trade. You've got so many people out there that don't even know where to begin. They just take trades at random times of the day, at random places in the chart. Those people will never make money. You have to find those high probable areas. You have to find where people like myself are actually operating, where we are putting in orders and taking out orders. That's what you need to be able to identify. Once you can identify that, then you can create your own set of rules for entry criteria, right? My job is a guide, how to show you how to analyze price for the most consistent and higher probable entries, so that way you can be a better trader. That's my job. My job of telling you is not telling you where to go trade. Now trade, now get out, now do this, now do that. That's not my job. Occasionally on these live streams, I will do that, right? Because I'm trying to build an audience. I'm trying to get engagement, right? That's what you got to do. Nobody else on YouTube is taking live trades and calling those trades out before price gets there. All of your bigger YouTubers, the ones that have bigger followings, they just have a lot of charisma and they just say a lot of big words to make themselves sound smart, and they get massive followings. I figured if I come out here and just do what I do normally, consistently, over time, it'll build an audience, because people will just show up, if only to maybe potentially get in on a profitable trade. Do we lose on some of these trades? Absolutely we do, right? We don't make money on all of them, and I am filled. I am out of the long position. Right there on that, that's where I was filled when I was getting a cup of coffee. Boom, shakalaka, baby. Now this would be the area that I would expect price to go back to, but we don't know what price will do ever. So when it gets close to your take profit, go ahead and take profit. Go ahead and get out. I see no problem with getting your risk off the table. None whatsoever. That is a 0.5% move. So not a big move at all. Just a quick scalp. With a lot of leverage, you can make money. Like I said, on that position, inside of my P&L went up 15%. If you can do 15% per week, my God, man, you're going to be rich. Or at least be able to do what I do, which is work a couple hours every morning, standing in front of the monitors, in front of the trading desk. And then when I'm done, I'm done. The rest of the day is mine to do whatever I want to do. That's the goal of trading. That's why so many people are drawn to trading, because all you physically need is a laptop or a cell phone and an internet connection. As long as you have a profitable strategy and can operate that strategy wherever you are in the world, you don't even need to be home to be a trader. You can literally trade on your boat, on your yacht, if you have internet connection there on your yacht, which most yachts come with nowadays. I'm a very humble guy. I'm not a flashy guy. I don't own a Lambo. I drive an '06 Dodge Dakota. All right? I'm humble. I do not live outside of my means, so it makes it a lot easier for me to be, do what I do because, yeah, I'm humble, right? I don't have that rich and fancy lifestyle. I'm not out there trying to attract young women, so I don't need fancy cars and all that jazz. A car is a car for me. It's a mode of transportation. It's to get me from point A to point B. Plus, it being an '06 means that I can still find parts for it, and those parts aren't that expensive. I can only imagine what 4 brand new tires costs for a 2024 Lambo, whatever the top model is this year. 4 brand new tires for that car probably costs more than some people's homes. You got to think about stuff like that before you make big purchases. All I was showing you is that with this strategy, you do not have to know direction. You just have to be able to identify your operating range. Once you can do that, man, you can clean house. Clean house. But just do it once a day, right? Just take one trade per day, because the more you trade, the more you're going to lose. It's statistics, it's math, it's probabilities, right? The more chances that you put money on the table, the more chances is you're going to lose that money. The tables are stacked against you. In the casino wins most of the time. In the market wins most of the time. So you take little base hits. This is about building consistent wealth over time. Growth, not wealth, growth. Consistent growth. You want to see your P&L, your equity curve, have a slow ascending rise. When you got that, man, you can basically get anybody to give you money to trade. There's several people inside of the Trade Talk community that go the hedge fund route, or that are trying to go the hedge fund route because their jobs don't pay them enough money to actually trade to make enough money to make a living. So they're going to go with the hedge fund route. You know what I mean? All you need is to have evidence that shows that you are a profitable trader. The amount of money that you trade with is irrelevant to a hedge fund. It's irrelevant. They do not care. As long as you can prove to them that you have a track record of managing risk very, very well, and also clocking a profitable return month over month, year over year, they will give you money to trade. More money than you can even fathom. But you have to be that operator. You have to be that person that can show those results. So you don't need money to trade. You can trade other people's money. People always ask me to trade their money. I don't want to. I am fine doing what I'm doing. I am situated. So I'm golden. But apologies on the loud music. It's not just one person saying music was too loud. Sorry about that. Sorry about that. Lachey Referral said literally nothing. I don't know what that means. Oh, Powell? Yeah, probably. He did literally say nothing. Nothing at all. So there we go. Market's pushing up. So when you take your profits like that, you move your stops to break even. Now any extra move up is just icing on the cake, right? Then when your unrealized profit gets to be substantial, you can cut that in half by taking more profit. You know what I'm saying? So ultimately a fantastic day. Tuesdays are the best. I was a little bit hesitant about Bitcoin because it was moving up for the very first part of the week. And typically when the assets move bullishly on the beginning of the week, that means that it's probably searching for a week high. And it still could be, right? It still could be searching for that weekly high, but we'll see. We'll see. There's nothing here for you to go by as far as a liquidation point to look for the short if you believe that Bitcoin is going to continue to go lower. I did do something yesterday with a line chart like this. I guess you could do something similar. I don't know that it's going to act as resistance, obviously, but you could clone a trend line and then just pull it up to the top like that. And then maybe when you get up there, it'll look like this on a candlestick chart. Maybe when you get up there, you'll find some resistance, but there is no liquidation point. The next liquidation point, as far as weeklies goes, is 18,394, all the way up there. Why is that not yellow? Thank you. You know what I'm saying? You feel me? You feel me, dog? Oh, big announcement with Bitget. As of December 2nd, they are no longer taking U.S. customers. So if you did not use my affiliate link to get into Bitget, you will not be able to get in there now. The rest of you that live throughout the world still can use Bitget. It's just the U.S. The FTX debacle has made regulations damn near impossible for Bitget to operate with U.S. citizens. They can only allow you to trade 4 pairs in the futures market and only allow you to use up to 2 leverage. And they just basically said instead of only being able to offer that, they would just not accept U.S. clientele anymore. If you are, however, in Bitget before that date, you are fine. You can still use the platform as you see fit. Okay? I feel very obligated to be very transparent on this channel. So I felt as if though I needed to tell you that. Secondly, if you do want to use Bitget and you are not in the United States of America, there is a link in the description. Please use code XTSC. That is X-Ray Tango Sierra Charlie, as it is a fantastic place to trade. I mean, their entries are nice. Don't get much slippage. They have the cheapest fees. I got in way before December, so my money is still over there. I am going to keep trading on the platform until I am no longer allowed to do so. What's up, baby? Pepe the cat, my cat, is telling me that there is somebody outside with a lawnmower and it is aggravating his nappy time. So I'm going to have to go open the door for him. Be right back. We'll chill on the music. Come on, baby. Come on. I can get you. You can get up here if you want. The door is already open, so I don't know what you want me to do. Do what you do. All right, the door is open, so I'm not sure what he wants. All right, double top at 17,395, says Johan. I don't typically, I'm not a pattern trader. When I see patterns that other people usually are looking for, I will draw them on the charts for them, but I do not trade them. I am a price action analyst. That means I analyze price for what it is and where it goes, and I use momentum basically to generate a consistent stream of revenue. I am one of the best price action analysts you will ever find. As far as candlesticks goes, I'm your man. But for patterns, double tops, Wyckoff stuff, pretty much ignore all that because it all doesn't mean anything to me. I do not see a double top. Maybe you're looking at the daily. Let me see. Maybe you're looking at the 5 minute. I don't know what you're looking at, but I don't see a double top. I guess you could say this could potentially be a double top. Yeah, but I mean, this was a bearish engulfing. The problem is where it did it, right? It did it at supply. But the fact that you're right back up there testing it again doesn't bode well for the shorts. It could absolutely run the high of yesterday and then roll over and give us that pullback back down to like 16,394 or 934. That would be nice, as that would be a pretty decent spot to look for potential bullish entries again. Let me get rid of the yellow. The yellow only is delineated for the yearly open. So you can see how this 8-hour resistance here held here. Tag, break above, fail. There's your break out. And then that actually held as support up. So any pullbacks to this area would probably be looked at with buying opportunities. It's not very uber bullish. This has been a very nice, slow, methodical rise in price. This is what we like to see. This does not mean that the bears are just so aggressive the bulls can't get anything going. Typically, you want low volatility in a bull market. The lower the volatility is, the better that is for risk assets to make their ascent. You sound better. Did you get rid of the allergy? Not yet. I'm still trying to get rid of it. It still has me choking. Brian says later. All right, Brian, I'll catch you later, I guess. I'm not sure what you mean by that. Did you ask for a chart? And I didn't see it. You guys, it's impossible for me to catch everybody's questions. The absence of direct political control over our decisions allows us to take these necessary measures without considering short-term political factors, he added. Right. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. That is a true statement, and those are immeasurable for sure. When you're in a market that just goes up for over 10 years, you can generate the kind of wealth that is unfathomable. Absolutely. The rich get richer in the bull market, for sure. But since 2008, this has been one of the best times in my life and probably in many of yours, to be able to change your life. You need a pullback in the marketplace. You need a bear market so that way you can be a buyer. You don't want to be a seller at the bottom of a bear market, ladies and gentlemen. You want to be a buyer. Okay? The reason is because markets go up more than they go down. Bear markets are short, though very volatile, and they don't take very long to wipe out an asset's growth, but typically they don't last forever. They do not last forever. They do eventually find a bottom, and once they find that bottom, that's basically where you want to start looking to be a buyer. So that way you can participate in the next bull market phase, right? All of this talk, this constant talk, oh my gosh, where is it at? Let me do this. Is it on this one? Maybe not. But anyways, this talk about the Fed pivot is such a meme. You've got people that don't understand markets or anything talking about the turn or the Fed becoming dovish again. Do you understand that markets go up even in higher in higher rising interest rate environments? Like the Fed is constantly manipulating interest rates. It was only in the pandemic that they basically dropped it down to zero. They had to do something, and they had to do something fast, guys. Right? But markets can go up even if interest rates are getting hiked. Now, the market will absolutely start to roll over and become bearish if the rate hikes are too extensive or too fast. And we seen that in December of 2019. Yes, I was trading then. Christmas Day, we seen one, or Christmas Eve day was a half a day, and we seen one of the greatest losing days in the S&P 500's history because they were hiking rates so aggressively. Now, aggressive rate hikes will cause the market to go down, but just because we're in a higher interest rate environment, it does not mean that stocks and Bitcoin will not go up. We do not need a Fed pivot for the market to find a bottom. And trust me when I tell you this, the market is future looking. The market's going to set a bottom long before the Fed pivots. The market is going to know about when and where the Fed is going to pivot. So in a sense, you could say that price knows what the Fed is going to do before the Fed knows what the Fed is going to do. All right? The markets know. They are not waiting on a Fed pivot. We do not need to see a dovish Fed in order for the bull market to start. The bull market will start long before the Fed pivots. Long before that. Right? We can look at the CME Fed Watch tool and see what is being priced in here. Bright screen incoming. So here you go. as of right now, this is where we currently sit. Our current target rate is 425, 450. Right now, there is a 78.2% chance the market is pricing in a 25 basis point rate hike. 25 basis point rate hike. 25 basis points is more dovish than 50. It still is hawkish because it's still an interest rate hike, but their hawkishness is trending down. The reason their hawkishness is trending down is because of this. And this is what we've been following. This is what we've been watching here at Trade Talk. We don't care what the Fed does. What we care about is what does this do? This right here. This is what's going to basically call the bottom or the top of the bear market. In fact, if you look at that, that's pretty damn nice, right? That's exactly not what I wanted to see here, but here, let's do this. We know that the interest rate, or we know that the inflation topped out in June, right? June was 9.1, the highest since 50 years or whatever. This is when the world is crashing, everything's going to burn, cities are doomed. It's going to be like Legend, like the movie I Am Legend, right? Because inflation is just going crazy to the moon and it's unstoppable. And at this point, the Fed is not going to be able to get inflation under control. And I mean, all the talking heads were out there because that sells, right? Scaring the public, unfortunately, is good business. It's good for business. It gets people interested, to say the least. All right, but we were all over this. I said that if this ends up being the top and we start trending lower, the markets may in fact put in a bottom. That's exactly what I said. Exactly. If this ends up being the top, we could see the markets put in a low, right? Let's go here to the weekly time frame. Let's just do this. There is your bottom on the marketplace, right there. You made one liquidity stab lower, so technically that's the bottom. This liquidity stab lower right here, look what day that is. Look what week. This week. The week where we, Trade Talk, got short the dollar. Right there. That also marked the bottom of the market. For now, and it still is the low. Is it going to continue to be the low? Is this going to continue to be the high? Nobody knows. Like, I can't answer that question. It's an impossible question to answer. But what I can say is if you are looking to follow a channel that is very consistent in being on the right side of the market long before other entertainers and talking heads and your YouTubers and Twitters and all that, then you need to subscribe. You need to hit the follow button because we do this consistently. I didn't just get lucky here. right? I do it consistently. We're good at what we do over here. I have people inside of my community that are damn near as good, if maybe even a little bit better at trading than I am now. Absolutely killing it. I've got thank you letters, notes saying that now I have a funded account because of you, all of this stuff. Like, I'm just trying to help you guys to be able to do this yourself. Yourself. If you want to learn how to do this, and make sure you hit that subscribe button. Sorry about that. My cat, Pepe, he is the boss. I just live here. All right? I just live here. He is the boss. He makes all the rules. I love him to death, but he is definitely the boss man. What he says goes. So you can see that coming into that 8-hour level, you are finding a bit of resistance. We marked it out. This is the old term. This is a Heath level, if you will. What it is actually is a supply zone. We know it's a supply zone because of the bullish up close candle. Essentially, it's where orders changed. People were sellers here, and then they changed to buyers. We know that because we have a candle that closed up. So typically this area here will oftentimes act as resistance, as people view that as an area where there are leftover orders in the marketplace, orders that need to be filled. So that's the general thinking behind the way that stuff works. You get price that trades up into it the first time, you get a bearish reaction like that. The fact that you're getting another bearish reaction up there could be suggestive, right? It absolutely could be suggestive that it's going to have a little bit of difficulty getting above that price. Probably because the S&P 500 getting pretty damn close to that $4,000 level. So what a lot of hedge funds managers and stuff are thinking that we're probably going to see a whole lot of sideways markets for at least the first quarter of 2023, which, that either way is good for us. Since we know where we're looking for these entries and exits, where we're looking to attack the marketplace, sideways markets are good for us. We can make money in a sideways market, in an up market, or a down market. It doesn't matter to us. Like I said, I love Bitcoin. I hope Bitcoin gets to $1 million because I own quite a bit of it. But at the same time, I am not a Bitcoin maximalist. I am a money maximalist. I want more money. So if Bitcoin goes down to zero, I will short it all the way to zero. I will make money on my investment no matter which direction the marketplace goes. With the S&P 500 giving back most of its gains that it made there on the first hour or on the open. So I'm not sure if something else happened. Let's see here. I'm very sorry, but I am new to this website. I don't quite know how to use it that great yet, but I just want to see if there's any other 10 o'clock news. Yeah, we had final wholesale inventories at 10 and IBD tip econ optimism. Yeah, but neither one of those are red, so neither one of those are massive market movers. And it looks like it came in line with expectations. They were looking for 1%. 1% was last time. That's what they were expecting. That's what they got. So, not sure if that's what it is, but we'll see what happens. The money was already made, chat. The trade is done, right? The trade is done. The first trade that we were discussing was a short at the high of day liquidation. You got that right there. Then we were looking for profit taking right here, right? You got that on this push lower. Then we were looking for the long right there, and our profit target was up here, and we got that. We got that right here on this push. That push right there took me out of the marketplace. So this can do whatever it wants. I was stopped out on this move lower because when I take profits, I move my stop loss to break even. And my entry was like right there. So, but not on this chart on Bitcoin. Sorry. Right here, right there. We made a new fresh high of day. Told you to take profits down into here. We had a line drawn there. And then we got long. We took profits on this candle right there. So this pushed up. So I haven't been stopped out on Bitcoin. I got the wrong tab pulled up over on the other monitor. I pulled up the right tab and I'm still good to go. Apologies. Still early. I blame it on the medication. I drew a trend line on Bitcoin at the low wicks from June 18 and Oct 13, then cloned them, and they look better to me than your trend lines drawn from the line chart. I posted pic on Discord. All right, let's pull that up for everybody to see, not just me. We're a community here. We are a community. We are family. One thing I am not is a singer. Yeah, you do got some trend lines going on there. You mean as far as this one? So my question to you would be, why doesn't this stuff right here negate that? Right? The reason I did that on the line chart is only because if you were looking for resistance to sell into, right? We're bullish, but we are looking for a pullback. So, I mean, you can trade the pullback. The reason I drew it like that is simple. It's because, these are closes. So like, and I did it on a weekly also. It gets to me how some reason, and I'm not on log, I'm on regular scale. How come this doesn't line up with the daily? But I guess because it's the weekly close, the dailies don't have to close on the weekly, does it? I guess that's why it doesn't line up. I guess I answered my own damn question. So yeah, something like that, right? It's not, I wouldn't trade that for nothing. I only trade price. That's it. And when I say that, chat, I mean objective price levels. Opens and closes. Objective levels. Trend lines are very subjective. So like if I was using this as a trend line to look for resistance for me to potentially take a sell, this right here would be a massive red flag to me, right? Because it was resistance here, it was resistance there, and then BOW! That happened. Not only was it not resistance, but BAM! Like, that's a big honking spike up out of there. And then it got back under it. So yeah, I guess another test of it could ultimately work as resistance, but I would just, this looks like a bear flag still, this formation. So what I'm thinking is people are going to be looking to sell it. Pattern traders and bear flag and bull flag traders, all those people, they're going to be like, this is a bear flag. It's getting to the top of the flag. So Bitcoin's going to do something like this. Boom, 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 boom. And it could. It absolutely could, right? I'm not saying that their strategies don't work. There's no way for me to know if they work or not. I was just letting people know that there is resistance up there. But all you have to do is just simply look at the candlesticks and you know where that resistance is, right? It's an objective price point where resistance is. There is resistance. And it will be until you get an 8-hour close above the red line. The bottom of it even. You don't even need the top, right? The top is going to be considered the resistance. The bottom is going to be considered the supply. So a close above supply could suggest that price is going to continue up to test resistance to see if resistance wants to hold. So anytime we get a closure inside of supply or above supply, we get very, very hesitant about taking new short entries. What we want to see typically at these areas is what we seen here, right? You just got up in it and then bearish engulfing. That would have been a good signal. And it still is a signal. Look at this. You got 14 minutes on the close of this 8-hour candle. And right there is resistance. So a close below $17,267 will suggest failure at supply. So when you find these levels, it's also important to look at other time frames to see that they match up. Because I was looking at this one. This is a 4-hour supply. Right there. You can see that 4-hour supply zone there. But price didn't quite get to it before it rolled over. So I was like, what the hell? I mean, technically this is 4-hour support, old support. So it could have been that. So I draw the line down to the 4-hour support and then just go up. And then look at that. You got an 8-hour supply zone. So that's exactly why you have this move up. Some people are going to call this a fair value gap or an inefficiency or whatever term you want to use for it. It has been closed up. It's been sutured up, stitched up. It's no longer there. Your inefficiency is gone. And the fact that price is trading back up into it is more bullish than bearish. at the close in 12 minutes, if you close under 17,267, then you can watch intraday or hourly areas of relevance for potential short entries. Okay? Because the high of week could be being formed right now. This absolutely could end up being the high of week, right? Absolutely. But you don't want to short it down here. You don't want to chase price. So if you are in the camp that thinks that this is bearish and it is going to roll over because the market is going to zero, then you would be waiting for another retest of at least hourly supply. And a tag of that level, you would not want to see price pushing forward up above it. You would want to see just a tag of the level and then a reversal. So what that would look like on a 5 minute, if that's what path price is going to take, you would want to see something like that. So this would be your short entry. That would be your risk. If you're bearish, right? But still always have a profit target of at least 2 to 1. Always take profits if your profit target gets hit. Do not say, I'm going to hold it because I think it's going to go lower, because then you're letting your greed affect your trading decision. And do not let any emotion affect any trading decision. That's not how this works. You got to use tools that make it objective. You got to get consistent. You can't be consistent if you don't have rules in place and you don't follow those damn rules. If you don't have rules, or if you don't follow rules, the likelihood of you ever reaching profitability is very minuscule. I'm not going to take that. I would rather wait to be the buyer at support than to try to short an obviously bullish market. But that's your 1 hour level. That, and remember, that only applies if you close under 17,267 in 8 minutes and 55 seconds. So I would only be looking for potential shorts at 1 hour supply only if this candle, this current candle, closes under 17,267. Joining the replay crew a little behind this morning. That is okay. This video will be posted to YouTube on the live spot. It is a nice day. It's actually quite chilly outside, Mr. Brian. CEIX looks good. Looks like a long-term trend breakdown. CEIX. Well, let's go look at it. Yeah, everybody was so bullish on energy, and I was telling people to stop being bullish on energy. You don't want to be bullish on stuff, guys, that's at all-time highs. You want to buy low and sell high, not buy high and sell low. That's exactly the opposite of what we're trying to achieve here. But yeah, you are getting a breakdown. Now you have just liquidated an old swing low here, and this area here, but you did that the other day and you're back under it. So yeah, but would I take a short here? No. Where would I take a short here? Well, I might be interested to take a short if we get a bounce back up to $64. So I might be inclined to look for short entries up there. Right? But I can't look for short entries here because you're right into support and you cannot short at support. There is weekly support right there at 56.19. Last week tested it as support and it held. This week tested it as support and you are currently still trading above it. So it is still holding. Will it eventually break down? It's possible. If it does, next bearish target would be 52.67. But yeah, we were bearish on oil when everybody else was bullish. We made money on oil. We made money on the short. Me and Brian both traded USO to the downside right in here. Everybody was looking at this as a breakout of the downtrend. And then they were looking for this right here to be that bullish confirmation. This is where me and Brian got short. Why did we get short here? Because we were waiting for a lick break. Right there. Liquidation. And then the breakdown. Right there. Our bearish target was the yearly opening range. Yearly opening range was roughly right there. Yep, that's your yearly opening range. So we shorted here. We took profits here. Boom. Then I stopped being bearish on oil. The reason I'm no longer bearish on oil is because of the China reopening, right? If China has a successful reopening, then you're going to see more business class travel. You're going to see more demand come back into oil. We did see a brief stint of demand by contango. For you newer people out there that don't understand what I mean by that, contango just means that the price of the front month futures contract is more expensive than the underlying spot price of the asset. So that means, futures are more expensive than the asset is. That suggests that more people are buying futures because they think that the asset is going to go up, right? So like the thinking is by there being contango with the front month futures contracts trading for more money than the spot price, that means that there's more demand coming into the futures side, and that suggests demand. So once we got down here, we closed out that short position. So right now, currently, what we are waiting on is we are waiting to see, does oil, in fact, get back above 2023's yearly opening range. We don't care about last year. Now, last year's yearly open can and sometimes will act as resistance. As you can see there, it currently is. But for the yearly trend, for the 2023 trend, we have to wait for prices to get back above 80.54. So if the China reopening happens and it is successful and we do see a ton of demand come back into the space, then as long as we're trading above 80.54, any pullbacks into this area will be met with buying opportunities by Trade Talk and in our community. We will be looking to buy oil, but we'll probably do that by buying USO. If you have a futures contract, if you have TD Ameritrade's Thinkorswim, well, I don't even know if it's TD Ameritrade's Thinkorswim anymore. But if you have Thinkorswim, you can trade this. This is oil futures. This is the front month contract of oil futures. And you can see right now the spot price of oil is trading for $74.47. The front month contract for the oil futures is cheaper. So you no longer have that contango. Contango typically will be priced out of the market. Like market makers, that's when they jump all over. They jump all over an asset. When contango happens, that's like almost guaranteed money. Because eventually, especially if that demand does not come back, that's guaranteed money, almost guaranteed to start trading back under the spot price. I just don't have software that is needed to perform that strategy. But yeah, right now it doesn't look. But what I'm saying is, even if you do have Thinkorswim, you have to have futures at least turned on so you can trade it. But if you don't have futures, that's okay. You can trade USO. USO is it is oil, right? It's a fund that tracks oil. And if you look at the chart, it looks almost identical to oil. If we compare U.S. oil here, you're going to see that, I mean, it looks very similar. Very similar. So you can just trade USO by either buying the underlying or you can trade options on USO. There are options on USO. Which is what we did. We bought puts on USO. And those puts made money. Right? So, but we gotta see if that demand comes back into oil. As of right now, there is no demand in the oil. But it being a yearly opening range, it could absolutely be Q2 before price even does anything with that yearly opening range. It can happen. Here is what I'm talking about here. Let me show you this real quick. Just bear with me, please. As occasionally we do these fantastic little sessions where it really is good stuff. All right, so here is 2022 yearly open on USD CAD. Right here. We'll go back into the weekly. You can see how price was very choppy around this, right? There's the yearly open, first week lower, second week lower, third week above it. Then multiple weeks testing it for support. But ultimately, since the bulls couldn't get anything going above resistance, you couldn't get any breakout and hold, the bears ultimately won and right back under the yearly open you went. However, the same is said for the downside, right? The bears just literally could not get anything going. You did get a breakdown below support here, but you could not close under demand there. So ultimately, what did this do? This brought demand back into the market. And on this week right here, fantastic entry at a weekly demand zone. Boom. That is a break back above the 2022 yearly open. Now, if I go to the quarterly chart, you're going to see that took, this is the open. There are 4 quarters in every year. Q1, Q2, Q3, Q4. So that makes up your yearly range. This is your yearly candle on USD CAD. Any price action above 1.354 would be a wick, and any price action under 1.264 is a wick. So you would have on a yearly just a big candle with a small wick above and a small wick below. And here is that. That's what that looks like on the yearly. See that? Boom, boom. But my whole point is it can take up to a whole quarter before you actually get that trending move away from the yearly open. So the yearly open isn't going to give you, it doesn't, just because we're trading above the yearly open right now on Bitcoin, that does not mean that Bitcoin is going to be bullish all of 2023. It just means that as long as we are trading above the yearly open for 2023, I will be looking for bullish entries, right? If we get below that and we start to trend under it, then any reaction back up with that level would be looked at as a selling opportunity for me for the yearly trend. Okay? For the yearly trend. Because these yearly candles operate the exact same way that a quarterly, that a weekly, that a monthly, that a daily, that an hourly does. Exactly the same way. Exactly the same. And we have a lot of data and statistics on how these candles operate, how they're formed and everything. So that's why you don't see many indicators on my charts. That's why you don't see nothing but price most of the time with a few lines. I do use moving averages because moving averages are a good way to identify trend. If you still have difficulty identifying trend, which, hey, a lot of people do, man. You know what I'm saying? There are people that have been trading for years and still have difficulty identifying trend. When in reality, trend, it is dictated based on a time frame, right? And most professionals look at this on a year-to-year basis or quarter over quarter. So it's just like the trend will be determined by the length of time you are looking for. So like looking at this quarterly chart here, if I pull up all of it, then yeah, Euro's in a lifetime downtrend with every now and then a year or two here are up, right? You do get a couple years of up, but mostly you're trending lower. And you just had, 2 years of downside. So for 2 years, you've been trending lower. So trend is based on time frame. That's it. For the quarter, like say you are trying to identify trend for a 6-month period. Well, as of right now, the 6-month period, which this quarter just got started, to be fair, but as of right now, your trend is bullish on Euro on a 6-month outlook. see what I'm trying to say? So using these objective levels that I'm teaching you can help you with identifying trend. And being able to identify trend will go a long way in helping you stay on the right side of the market when making trading decisions. There is a method to my madness. Heath, can I please have a bit of your crystal ball? I'm telling you, if you just keep doing what I'm doing, you'll be able to do it yourself, Lackey, Lachey, Varel. I don't know how to say your name. I'm just going to call you Lashy. Looks like Lashy. But I promise you, I don't have a crystal ball. I just have over 10,000 hours of looking at price. And there's this old saying that if you have at least 10,000 hours of doing anything, that makes you an expert. I have a little straw that I'm looking for that I use as a push rod, and I cannot find it. Oh, well, I'll look for it later. Yeah, you just need time, man, and you need to be directed in the right way to identify stuff. Like, you need to be taught what to even be looking for. There's like 90% of the stuff on YouTube is absolute garbage. Absolute garbage. It's people who are obviously not traders acting like traders for views and to sell merch and all that other stuff. Like, they're not traders, and they have massive followings, some of these people. Some of your biggest YouTubers out there are not even traders. They don't have 1 cent of their money invested, not 1 penny, because they are not profitable. They are marketers. You have to be able to find those people and click unsub. That's the only way they're going to stop. You have to find the right people to follow. You find people that can offer you mentorship. And in a lot of cases, the ones that are successful at what they do will do it for free. Like, you know what I mean? I don't need to charge you $5,000 for a 30-hour course because I can give it to you for free. Because my shit works. So I don't need your money. I have my own. The Discord was set up specifically for donations and a way for people to contact me directly 24/7. I don't know how much longer I'll be alive on this earth. No time is ever guaranteed to anybody. So when I put the channel together, it was, hey, I'll put the channel together, and whoever's lucky enough to stumble across it, if they actually listen to what I'm saying, and they'll know everything they need to know to make their own profitable strategies to be able to trade the marketplace, and by using minimal risk. Like right now, I only have $13,000 on Bitget's platform. All right. Once I get it up to about 15 or a little bit more than that, then I'll drop it back down to about 3-4 grand, and I'll trade it back up to 15, 16 grand, and I'll drop it back down because of the leverage that is afforded to me. It allows me to be able to do that. And I just keep doing that over and over and over again. I move that right into cold storage. So technically I am long Bitcoin. I have much more Bitcoin now than I did 4 years ago. And if I'm lucky enough to be alive 4 years from now, I will have much more Bitcoin then too. As long as something don't get broken inside of it. But this is why I also trade Forex. Currencies are my favorite thing to trade because currencies, they're not going anywhere, right? People want fiat to die, but I got news for you. It's not ever going to. Not in our lifetimes. In order for fiat to go away, you would need some kind of Book of Eli type of stuff to happen to the world. And if that happens, you'll be trading lipstick and cat oil for the stuff you need, not money, not gold. Gold is worthless in times like that. You know what I'm saying? That's the only way currencies are going anywhere. They might change, they may become digital, but you'll still be able to trade them. Right? Learn Forex. It's the same. You apply the same principles. The same principles that I apply to Bitcoin and cryptos and Fox and stocks and options, I apply to Forex. No different. The exact same principles. Right now, the euro looks good. Right there's your yearly opening range on the euro. Let's go back and get last year's up too. That way we just have a pretty good idea of where 2022 started. Looks like it started. Excuse me. Looks like it started right there. There is a better way of doing what I just did. Finding the yearly opening range much quicker. Just go to your 12-month chart and turn your magnet on. All right. Go to the open and click left click. That's a much quicker way of finding your yearly opens. All right, so we know that for the last couple of years, this thing's been trending down. I only have parity. Let's change the color of parity because parity isn't yearly. Parity's parity. What color should parity be? I don't know. What color is a pear? Yellow when they're ripe. Since parity starts with a P, let's go purple. Boom. There we go. Parity is now purple because it has the same letter. Booyah. See? Very difficult way of doing things here. All right. Let's see here. We got, the last couple of years you've been trending lower on the currency, on the euro versus the dollar. And we know that because the dollar's been strengthening. The dollar's been strengthening basically because of risk off. But we think we may have found the lows. If we have found the lows, then we want to see price stay above 106,672. If we start trading under 106,672, then we can assume, at least for the near term, that the last 2 years trend is looking to continue. So then we can be a short seller only on the euro on swing highs, and preferably swing highs into, like big supports that were supports and turned into resistance. So like if I pull this out, you're going to see that this is yearly support. All right. The strategy is the same no matter the time frame. Here's yearly support. Notice how this year's candle, even though it's only 10 days old, traded right down to, yeah, I got long there, by the way, yearly support. That position has since been closed out because I took it here on this day. I got long. Boop, right there. I took profits on this move up right here. Move my stop to break even. So naturally, when we came back in for a liquidity push, we took me out of the trade and price instantly boom yod right back up. So these liquidation wicks don't always happen, but they do happen quite frequently. We did trade this. This was non-farm payrolls. But we were, some people were looking for shorts again up on this candle, and I told them to be very careful because I shorted that right there on non-farm payroll day, but I took profits here. Why did I take profits here? I'll show you why. Because that was demand. So entry, exit, right there. And then naturally, on this candle, that was closed out. So right now, I am setting flat on the euro with a near-term bullish bias. Why do I have a near-term bullish bias? Because we are currently trading above 2023's yearly open. It's easy, man. It's so easy, people don't even believe that it works. That's the only that's the only thing that I can think. People either A, do not think it works because it's too easy, B, they just don't like the way I sound, or because I am not selling a bunch of shit, I must be fake. Right? One of the three. I should hire a social media manager. I bet they would be able to tell me what I'm doing wrong. That's a joke. I'm not hiring a social media manager. So if you're a social media manager, please do not reach out to me. I have already been offered that by someone who's inside the Discord. And if I ever do decide to go that route, she will be the person that I hire. And her name is Kit Kat. She is already offered. She was the first to offer. So if I ever do go that route, I will reach out to her. Not a bull market, a kangaroo market. That's fair. You could say that. I never said we were in a bull market. Not even a little bit. I said the Dow looks like it's turning into a bull market. Its market structure has turned bullish. And it has, if you use moving averages to dictate bullish or bearish. Another way, there is another way to determine if something is in a bull or a bear market, and that is simple. How high are you from the all-time high? Because 20% from the all-time high marks a bear market. So right there, anything under 29,584, you're in a bear market for the Dow Jones. Anything above 29, whatever, you're no longer in a bear market. Correct? Correct. Okay. There's one thing that we know, and that's an absolute fact. That's an absolute fact. By using that data point to distinguish what even is a bear market, then you are no longer in a bear market. Secondly, how far away are you from the top? Well, currently we are setting 9% away from the all-time highs. 9% away from the all-time highs. Okay, so definitely not a bear market. How far are you up off of the lows? 16% up off of the lows. Nice. And finally, have you broken the downtrend? Yeah. Are you sustaining price action or trading above the trend line? Yeah. Are you above all your major moving averages? Yes. Are all the major moving averages situated in their correct spots? Almost. We just need the 100 to flip above the 200, and that will happen in 14 days. If you trade above 32,947, anything above that, those two lines are going to cross pretty damn soon. So, I mean, I don't think I would say Dow Jones is in a bear market. You can say it is if you want, but there's more criteria leaning towards this thing is not in a bear market than there is that says it is, right? So the probabilities are leaning more heavily towards where? Up, not down, up. And then finally, are you above your yearly opening range? Yes, you are. There's your yearly open. You are above it. So as of right now, you are bullish on the year, bullish on the month, bullish on the week, bullish on the quarter, bullish on the year. You're definitely not bearish, but I can live with kangaroo market for sure. Kangaroo market's an awesome term. We could be in this range. We could be in this kangaroo range for a long time, my friend. You called it kangaroo range. That's what we'll call it. Under 34,152, you're still in the kangaroo market. Above 28,715, you're still in a kangaroo market. Right? Let's go. Let's go. Where else are you going to learn these fancy terms? Thanks for the term, Mr. John. John Hurt gets credit for a kangaroo market if it ever becomes a t-shirt. I don't know what Price will do. Nailed it. Yeah, that happens often, Aaron. You know that. Aaron is the guy that likes to dig through all of my old content and help people out by throwing little terms and captions for finding specific things. He really is a lot of help. I appreciate that. TNX was along at 20x. TNX. We have TNX over here on the bonds. TNX has been along for a long, long time, but it has probably topped out. Or we'll get close to topping out. Once the Fed stops hiking interest rates, I think TNX is going to find top. I think that's almost mathematical, not possibility, but yeah. It's definitely having trouble from those highs up there. So we'll see if it gets back above them. If it does, then guess what? Your bear market probably ain't going to be over yet. Right? But at this point, with this market structure, would you be more inclined to buy support or more inclined to sell resistance? Well, if you follow my strategy is going to dictate to you that you're probably going to be more inclined to look to sell resistance. Does that mean that if the TNX gets back up to 3.75, that it's going to go lower? No, that doesn't mean that at all. But is that an opportunity that I might take? Hell yeah, because you can trade this on options, I think. I think the TNX has options. I had to pull up Thinkorswim. That's not Thinkorswim. I don't have Thinkorswim pulled up, and we're getting ready to log off anyway. We've been going for a long time. But yeah, I think TNX, I think you should watch 3.75. 375 might be a short. If you close the daily above 375, then leave it alone. Wait for price to get back under 375, then potentially look to sell 375. And you would do that by buying $4 puts or $3 puts, whatever floats your boat. I don't know if I'd buy $3 puts because $3 is all the way down here. That means you would need price to get all the way down here. You would actually need price to get like around 280 something in order to just break even on the trade. I would buy $4 puts if I was looking to sell the TNX, which as of right now, while they're still hiking, I'm not. But you can watch this. That's stuff you can look at. Want me to go pee on his lawn, Papa? That's Pepe the cat with the wrench there. That's my cat. Yes. Yeah, go do your thing. Can we get your thoughts on some fixed range volume and point of control here? Any useful info here on breakout potential? So when I'm looking at the point of control, obviously I'm only looking at the point of control on each daily range, okay? Because in my opinion, the long-term volume profile doesn't do anything for edge. That is just my opinion. Please do not destroy me in the comments section. My opinion means nothing. But I think session volume is the only thing that matters for day trading. And if you look at how current session volume is standing on each and every single one of these days, it does look or appear as if though people are buying daily supports, man. Daily support, there's your point of control. Point of control on this day, right under daily support or your yearly opening range. This was profit taking up here. Then you had a pullback. Where did you pull back to? The previous day's close. That's where your point of control is. That means people started to buy there. The very next day, you can see that buy did work, in fact, and then you had bullish expansion. Then the point of control, where is it? Roughly around the close of this day. That is what? Profit taking, correct. Then the next day, you had a bearish pullback day, point of control marked at the close of day. What does that signify? Pretty much buyers are back into the market. Then you get that demand, and then you get another rapid bullish expansion to the upside. You see what I'm saying? That's how I use point of control. I don't use it as entries or exits or to influence directional bias. I basically used it to help build the strategy. Right now, the way point of control is structured on today's range, it suggests that you're going to see bullish continuation. And if you take the volume point of control off, or the volume profile off, all right, and you see where is that, let's just mark a line on the chart for anybody that's here that wasn't here earlier, because we already know what level this is. It's yesterday's close. See? Yesterday's close. So buyers right now are so aggressive, they're literally buying almost at every daily close. It suggests bullishness. It does. It suggests bullishness. Something else that is suggestive that we're probably going to see bullish continuation. This is all my opinion, guys. Please understand that there is nothing that is 100% in trading. There is only opinion. You're above last week's high. So you've already liquidated any stops above that right here. So if you were going to roll over and be bearish, you would have done it here, more than likely. But you didn't. In fact, that is also where you found a little bit of buying. Now, that does not mean that that point of control can't migrate from down here to up here by the end of the day. It's still early in the session. It's 11:30. So by 4 o'clock, the volume could migrate up. The point of control could migrate up to here. And that would be suggestive of, first and foremost, profit taking. And then since we know what is here, we know there is an old supply zone right there. It would also suggest that sellers are selling that. So my advice from right now, this second, is to wait for another daily support to be a buyer again. Right? Because the buyers have been aggressive. Look at this methodical rise in price. It's almost prophetic in the way that I just explained it. It's exactly what's going on. This could all change tomorrow. But for the last week, the last several days of this week and the end of last week, you can see how aggressive buyers have been. Okay? So until that changes, we will have a bullish bias. You did close above resistance. The only way that I would be bearish here and looking for a short entry tomorrow is if this candle engulfs this candle. Because this candle will be a bull trap in that scenario. So if prices gets under 17,186 and closes under there today, then tomorrow you can watch for entries around there or whatever. There. Right? If you completely engulf that 8 hour to the downside, any spike up in the 17,285 would be an area where I would indeed look for a short trade, because at that point it would look like the sellers are back, right? So, but that all has to play out first. We need more data. But we've been bullish all week. And I still will be bullish as long as we're trading above that price. 16,530. Above that, I am bullish. Above 16,531. I'm bullish. But I'm not going to buy the top. Okay? I'm not going to buy the top. What I'm going to buy is a daily support. We will wait for daily support. Once daily support is formed, then we can look for pullbacks into it and then look for the potential buys to continue on up. I drew a trend line on Bitcoin at the low wicks from June 18. Yeah, we read that already. Nice day is, could you take a look at the Euro 50? EU 50, we'll look at that. And then let me scan through any of this stuff real quick just to make sure that not. I like to use trend lines as additional info, but I'll look far best. I'm long from 16,398 with a small margin. I never know when to take profit again, since I already took profit halfway or the original trade. The only thing I could tell you, Drew Dickman, is if you got an extra $1 a day that you can spend on the 1st of next month, jump into the Discord, ask questions. I can help you. I can at least show you where you're looking for entries and where you're looking to take profits. All right? Or just watch these videos over and over and over again, and eventually it will sink into you. What platform do you use to trade? Oil, Think, or Swim? Hi, Heath, late to the party today. A girl has to get her hair cut. Nice. Nice. Got to stay pretty. If you get a chance, could you please look at UK 100 on Oanda? Could you look at Baba? 11 p.m. Thailand here. Need to go. All right. Have a great night, Poida. Heath, you are so far behind in the comments. Yeah, I know. Hi, Heath, on the DAG chart. How to draw a trend line. All right, so first, Euro 50. It looks like it's breaking out, right? If these are the 50 top stocks in the Euro, I don't know, maybe. But yeah, it looks like it's doing much better than it was. A lot of your standard or old school technical analysts are going to say this is an area for you to look for shorts, and you probably could. I think people will start to take profits here in fear of this area becoming an area for sellers to kick back in. But I would be watching roughly around 38.20 down here, 37.93, somewhere down in here for potential buying opportunities. All right. Because as of right now, your trend is obviously broken to the upside. See how your moving averages are situated. You're above the 21, you're above the 50. That means, in my opinion, you can look for longs. Yeah, and all four of your moving averages have been situated and structured for that splay, for that move out wider, for that bullish move up. So any pullback into this area, 37.96, I would be a buyer. Unless you get a massive breakdown, price just blasts right through it, then you leave it alone. But if that area holds as support, 3,800 is a nice big fig number. I would leave it alone. What was the other one? Maxis will say Bitcoin is the only real money. Yeah, meanwhile, they're down 80% on their investment. Regarding the trend lines, the reason that spike doesn't negate a trend line is break is because if peaks right into the original trend line. Got you. S&P rejected off of old daily. That will happen, Red OZ, for sure. Those levels, they matter. I like to use the trend lines as additional info, but for bar-based entries, around trend lines, I wouldn't find the entry from the trend line. Good job. Don't ever take entries off of trend lines. You will be stopped out a lot. UK 100 on Oanda. There it is. Yeah, it's breaking out. It's a CFD. What this really is is it the DAX? No. Nikkei, no. XHB, no. Nifty, no. It's the UKX. That's what that is, the UKX. Yeah, I mean, we were talking, I made a post about that the other day. It is definitely looking strong now. I mean, man, you're just a little ways from making all-time highs. There's nothing to do with this asset. This was the place to be a buyer. Anywhere in here, right? You find support and you be a buyer. You look to be a buyer at the lows, not at the highs. Could you buy here and then see 9,000 in the next 5 or 10 years? Absolutely. But how much drawdown is there for, how much potential is there for drawdown to be a buyer right here? Because I don't know about you, but I hate sitting in drawdown. So I would wait for a weekly support test for getting long. But it's definitely structured bullish. There's nothing else that anybody can say about this. On the weekly, this thing's moving averages is structured bullish. That's on the weekly. Here on the daily, you are bullish. It has been choppy, though, because right here you were structured bullish, too. And you dropped right back into what looked like a bear market, then right back out, then right. So, I mean, you could see more of this play out right here. You could see more of that play out. But right now it does look like it's on a tear, and it does look like it is reaching for that all-time high. The next one was BABA. I don't like investing in Chinese markets right now, just basically because of the reopening. But if you do like BABA, I liked it when it was being ran by the original owner. I don't know if he still partakes or if the China, the government runs this company anymore. I have no idea about him, but there's the low. Potentially the low is in. So you could look for buying opportunities anywhere above $60, right? Wait for some pullbacks. You will get pullbacks, ladies and gentlemen. This isn't going to just go straight up. Can it? Yeah, but it's not likely. It's not likely. Watch weekly supports for potential buying opportunities. Next one is 85.47, or roughly the midpoint of this current price expansion. Lines up nicely with weekly support. Boom. That it gives you a measured move is all, right? Gives you a nice measured move. Something like that. That price is 86.61. 86.61 is the only place I would be a buyer on BABA. And that's only if it holds. You are welcome, Poeta. on the DAG chart. I don't know what DAG is. Maybe you mean DAX. I don't know. Is the DXY at support? You've broken down below support. I don't know what you mean by DAG chart. Maybe you mean maybe you're saying on the dang chart. I don't know what you're saying, but what you're saying is you're saying that the dollar would now be at support. Like, I can draw a million different trend lines on this thing and it's not at support. What I would just say is you are trading under support. You are at support, but you're under it. You're trading under it. This 103.49 is support. Whether that support holds or not, that's two different things. That's two separate issues. But you are currently trading under support on the dollar. This is a fresh breakdown. Next weekly support is all the way down to 101.63. But the next liquidation point on the weekly is 101.84. So I don't know that it's going to continue down there because you do have demand on the weekly sitting right there. But I don't like using demand candles when they're massive like this. The fact that this big bullish breakout candle here makes this line the midpoint says, yeah, you can use that for demand, right? So as long as you're not closing weeklies under 103.02, then yeah, there is a chance for the DXY to get a bounce. How significant that bounce is, I don't know. If that bounce comes, I don't know. But as far as just looking at the chart, yeah, it's at an area where it can bounce. And it could trade sideways for the next 8 weeks, 10 weeks, right in here. From 103 to 106. You could trade absolutely sideways, just bouncing back and forth, since we are in a kangaroo market. Jordan likes to take entries on trend line breaks. Well, Jordan can trade however Jordan wants to trade, right? Jordan is his own man. He's been successful doing it for 20 years. Those are his words, not mine. So if you take him at his advice or at his words, then go ahead and take entries at the same place as he does. I don't know what to say about that. Like, dude, I'm not saying that people that use trend lines is not successful or profitable. There's no way I can say that. Jordan put 50% of his wealth in Bitcoin when Bitcoin was at like 9 grand. So Jordan made one hell of a trade there. 50%, half of his net worth in at like 9 or 10 grand. He 6x'd his net worth. Not freaking bad, right? Not bad at all. And I know that the CTM group that he built is doing very damn good. So Jordan isn't hurting for money. He is doing very good. Very good. We are two different people. When I joined CTM, I joined it based on one reason and one reason alone. I liked Jordan's style. I never paid to join CTM, right? In the beginning, it was free. When he had like 3 or 4 people watching him on YouTube, I was one of those people. Then it got up to like 30 people. Then he made a chat room for everybody. Back then it was free. It wasn't long after that that he decided to put it behind a paywall. I've never, ever spent money to be in another trader's room or anything. I had already had my own profitable strategies. He built a scalping room so that way I could hang out in there and help people. And that's why I even have my own stuff now, right? Is because of that reason right there. Jordan helped me get my channel started. He helped all of this. Jordan sent me my first microphone. I have no problems with Jordan. Me and Jordan are not enemies. We are friends, very good friends. I don't physically or personally know him other than what I've spoken to him on the phone, but seems like a fine person. You know what I mean? I don't trade trend line breaks because of liquidations. I've seen too many of them. But his style is completely different. I am a intraday scalper. He is a position trader. He's looking to get into a position and potentially set into that position for months to quarters to years, right? His style is different. It's very different. That's all. We're not in competition with one another. Not even a little bit. Jordan's a fantastic guy, as far as I'm concerned. Day chart, sorry. Yeah. It's possible. I draw trend lines are very subjective in the way that they are drawn, the way that they are interpreted. I don't know. You gave me exact points. All right, let me go back. May 27, 21. So let's find May 27, 21, first and foremost. All right, let me get a trend line loaded up here. May 27. $21 to now. And it's at support. All right, so if I tighten it up, yeah. Right there. Where's the other one? I could just do it better. I just put it right here on this swing low. I would argue that you got support just a little bit lower, right? But it's just how you draw your trend lines. Maybe you did it on a line chart. Maybe you're using the close of May 27. So let's use the close. Yeah, if you use closes only, you're getting pretty close. But if you listen to what I said there at the final rant, you're at support. Right there. That is a Heath level. You have already tagged it. You are currently bouncing from that. On the intraday chart, you can clearly see that price is holding as support. If you want to be a buyer of the dollar because you think the bear market is not over, can you buy that? Is that what you're asking me? My answer to you is yeah. Hell yeah. If you think the dollar's going higher, man, you are at a potential demand zone. You can be a buyer of the dollar or a seller of the euro. Your choice. Yeah. Like I said, this thing could trade sideways to up. Nobody knows what's going to happen in the future. Not me, not nobody. But you're right. You got a little bit of trend line confluence coming in at a weekly demand. Dollars at support. I concur with that statement. But you did just break down from support also. From the last support. And as far as this being support, it is, for now, holding as support. You're not really getting much bullish momentum off of it. You're not getting nearly the bullish momentum off of this support as you got bearish momentum from this resistance. I would want to see at least more momentum than this. But if you look at it on a weekly, you have broken down. Now, it's the close that matters. Today's just Tuesday. We're going to have one more public live stream before. So there's a huge possibility that this thing is trading back above 103,494 and that this will look more like a test of support than a breakdown. It won't be a breakdown. In order for this breakdown to even count as a breakdown, you got to close under. So you're correct. The dollar is at support, and with that trend line you just showed me, you got a confluence of supports there. Miguel Salia says my trading improved considerably since I got rid of trend lines. Got to run. Thanks, Heath. You're welcome. I think that level on the DXY is also the wick high in March 2020 COVID. Could be. And could I please give my opinion on copper? Yep, and then we'll wrap it up. Let's look at Capital.com's chart, because if I ain't mistaken, there's no gaps here. Had a nasty pullback, but you're getting a nice bounce. You're trading above the last 2 months' highs. You're early in the month, and that's your yearly opening range. So you know what I'm going to say. As long as you're trading above this price right here, $3.83, I would be bullish. If you break down below 383, I would probably start being bearish. All right. I know that sounds too simple, but we've been over this a million times already. That's your yearly opening range. If 2023 is going to have any sort of trend at all, this price will be crucial, key, even. If it's going to be a choppy sideways market, then no price is going to be able to call tops and bottoms. But if this is going to be an uptrending asset, look to be a buyer around 383. If it's going to be a downtrending asset, look to be a seller around 383. Thank you guys so much for being here. As always, I really appreciate your guys' love. And I really appreciate the fact that I have so many of you that are always here every single time that I do these live streams. I really appreciate you guys so much. We are going to kill it this year. We're just getting started. These are my favorite times to look for trades at the beginning of every single year, every single quarter, and every single month. My favorite time to trade because, the longer term opportunities are here, right? This is where we start looking for long-term opportunities. And I promise you, we're going to nail them. We're going to nail a few. So make sure you hit that subscribe button if you haven't already. Also, hit the bell notification because I don't have a job, so I can pretty much go live at any time and usually do whenever I feel like going live. So make sure you hit the bell notification. That way you know when I do go live. And we will see you Thursday morning. Yep, Thursday morning. There is no news planned for tomorrow. So Thursday morning we'll be back. Same channel, same place. Make sure you guys trade safe. Make sure you guys trade smart. And as always, happy trading, everybody.